G'day, Llew from Llew here, and I'm going to have a bit of a chat about the WA economy and how interest rates might be biting on our economy. We're all very aware that interest rates are going up. We seem to be getting a bit of correspondence from our banks once a month these days on another rate rise, and certainly it's all over the media. Even the Reserve Bank governors cop some criticism on predicting that interest rates were going to stay the same for the next 4 years. Well, it just shows you how hard predicting the future really is. You don't know what's going to happen around the world going forward. We didn't know COVID was coming, that had an impact. Where do we go from here? Well, look, if you have a look at what the forecasters are saying, having just said that it's very difficult to predict the future, but what the forecasters are saying, banks, is that rates are going to go up by about 1.5% from here on. That's what they're saying. Now, who really knows whether that'll happen or not? We can see the impact that the interest rates going up is having at the moment. That's pretty clear. What we can see is that people are very worried about it. It doesn't seem to be affecting the price of residential property in Western Australia, but I think it's fair to say business owners are concerned about the impact on the psychology of consumers on their businesses, because the reality might be one thing, but the sentiment in people's minds about spending can change when rates continually go up like they are at the moment, especially in 0.5 increment. Business owners would also need to be mindful of the fact that when inflation starts to turn the other way, it's going to be a signal that the Reserve Bank has done enough. And then what's the overreaction going to be to the rate rise? Who really knows? But the Reserve Bank are predicting that they think GDP will fall to 1%. Now, that's across Australia. What's it going to do in WA? Who knows? We've got a mining industry that's booming. The negative impact that might be felt in largely Sydney and Melbourne may not be felt here. Our GDP may not fall to 1%. But the RBA's policy set for the whole of Australia. Most of you who have got significant debt would be very concerned about rates going forward and would be looking at fixing some of your interest cost. Would have been a great idea in hindsight a year or two ago when we didn't have an inflationary problem, the Reserve Bank weren't reacting to it. Where we're sitting now is in a market where the market thinks that rates are going to go up by 1.5%. So whether they go up by 1% or 2% or in that range somewhere, who really knows? But if you're trying to evaluate whether it's worth fixing an interest rate or not, have a look at the interest rate you're paying, ask your bank what the fixed rate would be for 3 and 5 years, and then see if you think that premium, because it'll be a significant premium, it is a significant premium, see if that is a premium worth paying, given that we've got a sledgehammer being applied to the economy at the moment in the form of monetary policy, higher interest rates. That will dampen the economy. The Reserve Bank, if rates go up another 1.5 and it smashes the economy, which is what their intention is, then you could expect some easing of monetary policy in the second half of next year, I would have thought. So if we've got interest rates going up and then back down again, is it worth paying a premium for fixing an interest rate? That's an individual question for an individual business. If you'd like to know more about that sort of thing, give me a call at Llew.